Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today is Friday, August 21st, 2009. The euro-dollar pair, after consolidating in yesterday's session, rallied today, reaching an intraday high near 1.4375. The euro was bolstered by climbing stocks in European markets, which increased risk appetite, and also a positive batch of the flash manufacturing and services PMI readings for August. The euro gave up some of those loftier gains, retracing about 50% of today's rally before climbing again. For the week, we have seen a move in favor of the euro as stocks have regained their groove, and today's data bolsters the impression that the eurozone may post positive growth in the third quarter. Eurozone manufacturing contracted for another month in August, preliminary data showed, but the pace of contraction eased compared to July. The manufacturing PMI rose to 47.9 from 46.3, but stayed below the 50 level, separating expansion from contraction. The services sector, meanwhile, saw its PMI rise to 49.5. There was no major news out of the UK, though the pound-dollar pair rallied in overnight trading as UK stocks rose. However, after running into an upward sloping line of resistance, the pair receded, staying within its recent range. The pair will wind up ending the week around where it started, though overall price action is pointing to higher prices in the pair. The dollar-yen pair surged higher in New York trading as the Dow Industrials, the S&P, and the Nasdaq indexes rose and by the end of the session had moved to their highest levels for this year. All prices reached a high for this year as well. The dollar-yen broke above a downward sloping line of resistance, rallying about 100 pips from its low to set an intraday high near 94.70. In comments today, Fed Chairman Bernanke said that economic activity in the U.S. is leveling out and that prospects for a return to growth in the near term appear good, though he did caution that high unemployment will make recovery slow at first. Stocks and sentiment in New York trading was boosted by a better-than-expected U.S. existing home sales report. Sales of existing homes surged 7.2% in July to a 5.24 million annual rate, a figure that surprised forecasts on the upside. It's also the highest level of existing sales in almost 2 years and shows that the recession in the housing market may be easing. The market is being lubricated by falling housing prices, with the median price down 15% compared to a year ago, government credits for first-time buyers, and low borrowing costs. All the good cheer helped to propel the US dollar-Canadian dollar pair downward in favor of the loonie. For a third straight session, the pair notched a new low for the week, falling to support at the 1.0760 area. The pair experienced its 150 pip slide, following a test of a trend line that had acted as support that has now turned to resistance. The last week of August is light on big releases. Highlights include U.S. housing prices data, durable goods, personal income and spending, and both the Conference Board and the University of Michigan Consumer Sentiment Indexes. The U.S. will also post its revised version of GDP, as will the UK. Japan, meanwhile, will post end-of-the-month statistics on Thursday, including manufacturing data, household spending, consumer prices, and the unemployment rate. And that concludes our coverage of the Forex market for this week. Thank you for joining us here at CMSFX.com. And from all of us here at CMS Forex, we wish you a great weekend.